Taking a look at today's interest rate markets, let's look at the 10-year note futures as they're realizing a nice bounce today. After 6 days of selling pressure, we are seeing the 10-year note futures retaking the 131 handle today, 131.05 currently in the futures market, and stemming some of the recent selling pressure. So at least for today, we are seeing a nice bounce. And I think when you look at some of the reasons why we're seeing this recovery today, has to do with a couple of narratives in the market. Now, we did get a report from the IMF this morning indicating that they see global growth being challenged over the next year due to some of the headwinds from the virus and also supply chain issues. So they revised their growth prospects or forecasts for the next year, and I think that's part of the reason why we're seeing a bounce here in the treasury markets. Couple that with I think showing up as some positions as well as with the trend reversal, at least for today, that we do have several big data points and news items coming out in the next couple of days, highlighted by the CPI and the Fed minutes tomorrow. So I think that could be another factor why we're seeing a little bit of volatility here before some of these numbers and data are released over the next couple of days. I do want to point out, when you look at the yields, 10-year note yield is down 3 basis points today, 158 basis points. So we are seeing it back below 160 basis points. And you're seeing the yield curve flatten. We're seeing the back end of the curve rallying and those yields coming in more so than the front end of the curve. Really, the front end of the curve is pretty stationary today. So from a short-term perspective, we are not seeing much of a change in the pricing structure in the notes and the bills. But when you move out over the spectrum, particularly the back end, primarily, I think, due to the IMF revisions potentially, as to why we're seeing that back end rally more so and pushing those yields down on the session.